marble's limestone that's been metamorphosed by heat and pressure. Welding calcite crystals together, generally semi-opaque. It's an important member of the marble family, as generally described in dimension stone, is greenish serpentine marble. We'll look at serpentine again in a minute. Marble production is widespread throughout the world, with Italy, the Carrara marble, and China, the world leaders in marble production. India, Portugal and Spain follow as prominent producers and exporters. And those of you that look at major city developments will know that there's an enormous amount of dimension stone going into new buildings here in Singapore, in the cities in China, and in fact throughout the world, but those two places particularly. And so the market for dimension stone is really quite large. So what distinguishes the products? Well, it's the colour of the marble and the texture, as well as its durability and your ability to get the right size blocks and tiles out of your particular deposit. That is, what's the physical structure of the marble? Is it a solid block that you can cut up like that previous picture? Or is it already fractured and you've got to be cutting discrete blocks into the right shape? Much more difficult process. So marble is quite resistant to erosion, so it outcrops, and outcrops of marble are often elevated, as that previous hill was, and form prominent landscape features. So marble's most commonly quarried for the production of blocks or slabs and tiles, and that photograph is a series of slabs of marble in a warehouse, generally 2 to 3 centimetres thick, and the ability to produce those regular slabs is dependent on the absence of faulting and fractures within the marble. As well as marble blocks though, slabs and tiles, there's a market for crushed marble, and that's commonly sourced from fractured blocks and sold either as aggregate or as raw material for the production of calcium carbonate powder, another filler in paper and paints, etc. Very tight impurity specifications on this calcium carbonate powder, and only the purest marble is suitable as a raw material. So material that might be satisfactory from chemical composition for the production of slabs of marble might not be suitable for the production of calcium carbonate powder. But there was 1.3 billion square metres of natural stone, that's the slabs that I was talking about, including marble, used in the construction industry in 2012. And if we look back at 2001, the industry body reports that there were 709 million, so that it's almost doubled in 10 years. China is the most significant consumer of dimension stone, including marble. It's a major producer, but it also imports significant quantities of marble. Currently, it appears that demand and supply of dimension stone, including marble, is approximately in balance. The prices vary by product, quality and market. And for instance, TerraTech quote in their prospectus that the prices in Singapore dollars vary from $1,200 to $1,900 per cubic metre for block marble, and the value for marble per square metre based on 2 centimetre slabs varies from $45 to $80 Singapore per square metre. Because the prices for aggregate are $18 to $100 per tonne respectively, depending on whether it's aggregate or calcium carbonate feed. So there's quite a range of prices. It's not just one price for marble, the price is very product and use specific.
And then fashion comes into play. What you might have thought was a good marble to produce for years and years might all of a sudden go out of fashion because somebody's produced a black marble that everybody wants, and the price for black marble goes up, the price for the other goes down. And you mentioned before we came in about, I've got Italian marble. Yes, and of course there's a premium for the Italian marble.
Hi, so let's say you have a marble mine in Malaysia, close to Singapore, and your major customer is a Singapore construction material company. So you sell the marble to them. And will you be able to increase your capacity, production capacity, easily and at a cheap cost when there's a higher demand from this market, or is it very expensive and operationally difficult?
Well, that would depend on the deposit that you had title to. But if you looked at that photograph that we had up there earlier, you could imagine that could run faster than it might be at the moment. And you could also perhaps envisage that there might be, if there's one hill like that, there might be 5 or 6 more, and you might be able to start a second project on the second hill at not very much increased capital cost, I would imagine, and a lot of the processing facilities would just need to be marginally added. So I would imagine that within a certain size range, you could increase your capacity to improve your the amount that you're sending to market, and therefore probably increase your overall profit because you're able to expand on your production capacity without necessarily spending a lot of capital to do it. I think that's possible.
And you can scale it down when let's say the market demand is not as strong as before. Much
simpler to do I think in an industrial minerals situation where you simply stop one of the slabbing machines or you turn one of the saws off. Much simpler to do than in lots of the other minerals projects. Yeah.
Is this industry, globally speaking, a more concentrated market dominated by a few oligopolies, or is this a very fragmented industry?
Yes, you're right. Very segmented. There's a whole lot of small producers. There are some quite large industrial minerals companies in Europe, but generally it's an industry that has a large number of small players.
So is there a reason for that, or is it just the way it has been?
Well, the reason for that is that the market's so spread. That there isn't the benefit. There isn't necessarily the benefit in the magnitude of an individual operation. So there's no situation like Rio Tinto and BHP in iron ore in Western Australia building up their capacity to 300 million tonnes a year and shipping it as fast as they can, because the markets for the industrial minerals are so widespread, the transport cost is such a large proportion of it that getting a source close to the market is the important thing.
Thank you.
In other words, there's no real benefit from scaling up, I suppose, in the same way that the gold miners, remember that big phase of consolidation in Australia 10, 15 years ago where one gold miner ended up picking up the other? We're not likely to see that in this case?
I'd very much doubt it.
Right. Which then raises the question of what the end game is for companies that produce this stuff. Arguably, as we've discussed in the oil sector, there are any number of small explorers whose sole purpose is to find the hydrocarbons, but then are likely to sell out to Shell or one of the other majors in order to actually produce it. Presumably, these companies that produce industrial minerals, therefore, because there is not a high chance of consolidation, presumably that's what investors are buying it for. They're not buying it for a takeover at some stage. They're buying it purely for the profits on the production.
I think that's true. The logic of takeover and consolidation of companies is much weaker in the industrial minerals market than it is in any of the other markets because of this dependence of supply and demand, or source and market being close together.